Hey everyone, welcome back to Corporate Dakota, the place where we take a peek behind the curtain of corporate filings. And honestly, this latest one is a wild ride and a half. Buckle up. So Bimergen Energy Corporation, a company in the renewable energy space, has filed an amendment number 8 to their Form S1 registration statement. This is basically a big update when they're trying to raise money from the public. Think of it like a detailed report card for the company, showing investors what's going on. They filed this on September 12, 2025, and it's a preliminary prospectus, meaning it's not final yet. They're offering shares of common stock and these things called pre-funded warrants, basically options to buy more stock later. The big news is they want to list their shares on the NYSE American Stock Exchange, aiming for the ticker symbol BESS. This move is a big deal, trying to get from the smaller over-the-counter markets to a major exchange. Now let's dive into the numbers. They're planning to offer 2,000 shares of common stock. The price is set at 600 SN per share. This is based on their stock's closing price on September 9, 2025. They are also offering these pre-funded warrants, which are a bit like buying stock, but delayed, designed to avoid exceeding ownership limits for some investors. Importantly, they have granted underwriters an option to buy up to 300,000 additional shares to cover any unexpected demand, a common practice called an over-allotment option. If everything goes as planned and they sell all these shares, they're looking to bring in around 10.6 million earmarked for developing their battery energy storage system projects and general working capital, which is essentially the cash they need to keep the lights on and operate day to day. When we look at their financials, things get really interesting really fast. For the 6 months ending June 30, 2025, they reported a net loss of over $1.6 million here. This means they're not making money yet, which is common for companies in the development phase, but it's a crucial point for any potential investor. Looking at the full year 2024, their net loss was a staggering $2.8 million, a big jump from the $920,000 loss in 2023. This increase in losses is largely due to higher operating $178,000 in 2023. This increase in losses is largely due to higher operating expenses, especially in general and administrative costs. For example, stock-based compensation expenses went from about $378,000 in 2023 to over $1.2 million in big jump from the $920,000 loss in 2023. This increase in losses is largely due to higher operating expense E24. This means they're giving out more stock to employees and executives, which dilutes ownership for existing shareholders and adds to the cost. The total accumulated deficit, which is basically the total losses the company has accumulated since it started, reached nearly $4.8 million by the end of 2024. This is a pretty significant number for a company that hasn't even started generating revenue from its core business yet. Now, every company has risks, but Bimergen's risk section is quite extensive, and for good reason. One of the most glaring points is the auditor's going concern opinion. This means the auditors have serious doubts about the company's ability to continue operating for at least the next year without significant additional funding. They've incurred significant net losses since they started and may not be able to become profitable. This is a huge red flag. They also highlight their reliance on key personnel like their CEO Benjamin Tran and President Cole Johnson. Losing these individuals could significantly harm the business. This is a common issue with smaller companies, but it's amplified here. Then there are the risks associated with building and connecting their projects. Think construction delays, permits not being approved, and costs ballooning. Given they're dealing with large-scale energy projects, these are very real possibilities that could sink the company before it even gets off the ground. They also acquired Bimergen Energy LLC in April 2024, a move that brought them a portfolio of development projects, but they admit they might not actually get the benefits they hoped for from this acquisition, and the integration could disrupt their current plans. This is a classic risk statement after any acquisition, and it shows a lack of certainty about this major business move. Let's talk about their actual business. Bimergen is all about renewable energy projects, specifically battery energy storage systems or BESS and solar projects. They acquired a bunch of these development stage projects from Bimergen, totaling a massive 1.965 gigawatts of BESS potential and 1.64 gigawatts of solar. The idea is to store excess energy from renewables and sell it back when demand is high, essentially balancing the grid and making money from price differences. Their main goal is to be a grid balancing operator. They want to partner with advanced technology suppliers and energy management systems to make the grid more stable, especially as more solar and wind power comes online. They believe BESS is key to handling the intermittent nature of these energy sources. Their core business is BESS, and they're betting big on it. They see a huge opportunity because the grid is aging and renewable energy sources are unpredictable. They plan to store cheap energy and sell expensive energy, a strategy called energy arbitrage. They also aim to provide grid services like frequency regulation and voltage support, which are crucial for keeping the power flowing smoothly. Looking at their project list, it's a massive undertaking. They have 23 BESS projects and 13 solar projects spread across Texas, Arizona, and other states. Some of these projects, like Redbird and Wildfire BESS, are listed with estimated cost for $160 million and a development fee of $3.5 million. The total estimated cost for $160 million and a development fee of $3.5 million. The total estimated cost for $5 million. This is a huge amount of capital they need to raise. The solar projects are also substantial, with an estimated cost of over $2 billion. However, the company states they are focusing their financing efforts on the best projects, suggesting the solar projects might be a lower priority. Here's where it gets a bit complex, involving related parties. They have a project management services agreement with Energy Independent Partners LLC, an entity controlled by Cole Johnson, their president. They agreed to pay F per watt for developing the BESS and solar projects. For all the BESS projects, this could amount to about $69 million in fees, and for solar around $57 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 million. These fees are only payable when the project secure financing, which is a critical condition. There's also an acceleration clause. If Mr. Johnson is removed or if there's a change in control of the company, 62.5% of these fees become due immediately. This is a significant potential payout to a related party. Then there's the project sale agreement with Bridgelink for some solar projects. Bimergen received a deposit of $943,500 and stands to get up to $19.4 million if the remaining proceeds are collected. It highlights how a lot of the money flowing into the company could be flowing right back out to related parties. They're talking about partnerships with equipment suppliers, utilities, and power purchasers. They're also working with independent system operators like ECOT and PJM, which are crucial for grid operations in different regions. These partnerships are essential for them to operate and grow. Let's look at executive compensation. For 2024, the CEO Benjamin Tran received a base salary of $206,000 and a reported total compensation linked to stock and options of $1.4 million. The President Cole Johnson received a base salary of $100,000 along with a substantial $4.2 million in stock and option awards. Indicate the company is heavily relying on equity to compensate its top brass, which can be a good strategy to align their interests with shareholders, but also means a lot of future stock is being allocated. Looking at the equity awards outstanding at the end of 2024, CEO Benjamin Tran has options for over 142,000 shares. President Cole Johnson has over 485,000 shares, and CFO Robert Brylon has over 485,000 shares, and CFO Robert Brylon has over 71,000 shares, all with exercise prices that seem quite low compared to their latest offering price. This shows they've been granted significant equity, potentially diluting future shareholders. This section really spells out the related party dealings. Cole Johnson, as president, director, and controlling member of C&C Johnson Holdings LLC, is a major shareholder. He also controls Energy Independent Partners LLC and Bridgelink Development LLC. Remember, those development fees from EIP for projects, they could total a staggering $69 million for BESS and $57 million for its own leadership. Has $57 million for solar. It's a massive potential payout that's directly tied to the success of securing project financing and the retention of Mr. Johnson. It seems like a lot of the company's future financial health is tied to these arrangements with its own leadership. Now, about the securities themselves. They're offering common stock, and these pre-funded warrants are a bit of a financial engineering trick to allow investors to buy stock now, but effectively defer full ownership, often to get around certain regulatory ownership limits. Importantly, the pre-funded warrants themselves don't give you shareholder rights until you exercise them and buy the actual stock. After this offering, there will be over 5.8 million shares of common stock outstanding. But what's key is how many more shares could flood the market. There are outstanding options and warrants that could bring many more shares into circulation, potentially diluting the ownership of existing shareholders. Plus, there's a lockup period for insiders, meaning for about 6 months they can't sell their shares. Once that period ends, a lot more shares could become available, potentially pushing the stock price down. Let's get into the nitty-gritty of the financials. Looking at the consolidated balance sheets as of December 31, 2024, the company had total assets of over $23 million. That sounds like a lot, but a significant chunk, $22.20 of Bimergen Energy LLC, and represents future development rights, not physical assets. Their intangible assets dwarf their tangible assets, which is a big sign of their development stage nature. On the consolidated statements of operations for the year ended December 31, 2024, they reported zero revenue, which is already expected, but the operating expenses were over 2,073, so operating expenses of around 927,000. This highlights the increased spending after the Bimergen acquisition. The net loss for 2024 was nearly $2 an ounce. This highlights the increased spending after the Bimergen acquisition. The net loss for 2024 was nearly $2 on a forearm. The consolidated statements of cash flows show a net cash used in operating activities of over $349,000 in 2024. This is better than the operating cash usage in 2024. This is better than the operating cash usage in 2023, which was around $457,000, but it's still negative cash flow from operations. This means they are burning through cash just to run the business. Now, for the really important stuff in the notes, remember that going concern opinion. Here's why. They've lost millions each year, have negative cash flow from operations, and rely heavily on external funding. They need more money to keep going. Management's plan includes raising more funds through equity or debt, or maybe even selling development rights, but there's no guarantee any of this will work. Here's more detail on the Bimergen acquisition. They paid $22.2 million for Bimergen's development rights, mostly in the form of company stock. This acquisition is accounted for as an asset acquisition, and they've recorded the entire cost as intangible assets. The payment structure to EIP, the related party, is based on future financing milestones, which is a huge potential payout linked to the success of these projects. This note ties everything together. Cole Johnson, the president, is the key figure in these related party dealings, controlling multiple entities involved in payments and project management. The company advanced over $415,000 in unsecured promissory notes to EIP with interest. These transactions highlight the interconnectedness and the potential for significant related party financial flows. Looking at what happened after the year end on April 20, 2025, they formed a joint venture with Relize Energy Group to develop up to 2 gigawatts of battery storage projects. Relize is committing up to $50 million, with the company contributing up to $12.5 million initially. These joint ventures show a strategy to bring in partners to share the massive development costs. Let's wrap up with other important details. They're upfront about the course of this offering. Besides underwriting discounts, they expect to spend about $475,000 on legal fees, accounting, printing, and miscellaneous expenses. This is a significant cost just to get the shares ready for public sale. This section details the stock and options they've issued over the last 3 years, mostly for services or to private investors. For example, stock awards and options have been granted to their top executives, as mentioned before. A significant portion of their shares were issued in exchange for their Bimergen acquisition, valued at $20 million. Finally, the auditors report Ramirez Jimenez International CPAs issued that critical going concern opinion. They also noted that the 2024 financial statements were revised to clarify revenue recognition policy and disclose working capital loans made after December 31 Jundiland acquisition and the project management services agreement as a critical audit matter. Because of the complex judgments involved, essentially the auditors are saying that the Bimergen deal and the related agreements required extra scrutiny due to their complexity and the significant management judgment involved. So what's the bottom line with Bimergen Energy Corporation? This is a company with massive potential in the booming renewable energy storage market. They've landed some significant development projects, and are making strategic moves with joint ventures to finance them. However, the financial picture is still very concerning. They're burning cash deeply in debt-related party obligations and are still far from profitable. That going concern opinion from their auditors is a major warning sign. The success of this offering and their ability to secure future project financing will be absolutely critical. The related party transactions, while common in early stage companies, add another layer of complexity and potential risk here. It's a classic high risk, high reward scenario in a rapidly growing industry. Alright, that's our breakdown of Bimergen Energy Corporation's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out our Discord in the description below for more discussions. Thanks for watching. See you next time.